and welcome to this most important event for the trading community, the Diwali’15 trading chat and investment chat that we have with some of the best names, the most wisest veterans of Dalal Street. Joining me today in this special Diwali conversation are Manish Chokhani, Director, NAM Holdings, Madhusudan Kela, the Chief Investment Strategist at Reliance Capital, and Raamdeo Agrawal, Joint Managing Director at Motilal Oswal Financial Services. Between them, it is almost 100 years of very wise investing. So, all that wisdom for you and to be employed in the next 1 year, 2007 to Samvat. Gentlemen, thank you very much for joining me.
Thanks,
well, let me start with you, Manish. If you looked from Samvat 2071 this year, it's not been very pleasant at the Nifty level. Is that the way to look at it at all? Has this year been not a pleasant year for investing, the year that was?
It's been a year in two halves. From last summer till March, the market kept rallying. And I think we all did reasonably well. And I think it was post the disappointment of the budget and then the EM crisis, which then sparked the sell-off. And even post that, I think the market's been acting wonderfully in terms of the rotation between sectors and specific stocks. So no reason really to complain. It's a great time to be an investor seeking alpha in India. And Madhu promises he's going to give us 5 great multi-bagger ideas. So, in that hope, we stay alive.
Yes, in fact, I'm expecting multi-bagger ideas from all of you veterans. But really, ultimately, it's the growth story. The just concluded corporate earnings season did not leave us very thrilled. In terms of top line, definitely not. In terms of margins, yes. What is the sense you're getting? When is that earnings turning quarter?
See, Lata, reality is India for long has been this, beautiful bride which has yet to deliver to its full potential. So while the P/E rating of India and especially of consumer stocks and companies like that has occurred, earnings have not kept pace. And there were certain fundamental things which one had expected a sort of right of center government to deliver, which for whatever reason, obstruction in parliament or unable to get legislation through and so on, it didn't happen. The global environment hasn't been supportive, and I don't expect it to be supportive. And I think it's also a reset of investor expectations where everyone thought you get a classic V-shaped recovery, you play economic cycles the way it did in the past, but without realizing that the world no longer is playing economics by the old rules. Because the very force of gravity in the world, which is interest rates, is currently artificially rigged by all the central banks. So unless that reset occurs, I don't think it's going to be life as usual. And for us investing out of India, if you're competing with 2% cost of capital, it's hard to say why the investment cycle is not reviving, because as an industrialist, I'm really scared of putting capacity against people with 2% cost of capital. Also, it is pertinent that nowadays a lot of the action is happening outside the public markets. We were speaking earlier that the private equity industry itself has put 4 times the money that the FIIs have put into India this year. And even in the US, the last big sort of tech IPO was Facebook and Alibaba. And all the other $250 billion of unicorns, as they call them, are outside the public markets. So that change is still occurring. And it is that disruptive phase for economies in the world, which the markets will gradually get to see as these companies come into the market. So I'm not as despondent about the lack of revival in the economy, because it is happening outside the public space.
Okay, I'll come back to you to check out how investors can take advantage of it. But you refer to the government, and so I will have to make that the next question, Madhu. Even as we await good tidings in the new year, the last event for the markets is not very encouraging. The fact that a government on which the market placed so much hope has faced its second major defeat in 2015 at the state level. Do you see that, taking away the Modi premium, are we still going to see some losses before we see the markets give us gains?
Lata, it can play the other way around as well. That what has been this somewhere. I think if they've deviated from why they came into the power, that was development. Essentially, if they go back and say that regardless of how the voters respond, we will carry on in our agenda and we will deliver on our promise of development, then it could be a different story encrypted in times to come. And to my mind, what happened on the Friday evening was a very, very significant event, which was the package of DISCOM. I cannot overemphasize the importance of that for India, importance of that for banks, importance for that for markets. I think this is the single biggest reform if it is executed the way it is presented. Let me repeat. If it is executed the way it is presented, then it is the single biggest reform which has happened in the recent past. Not only by this government, but by many governments. But you're talking if you can get the DISCOMs to a zero loss situation, it can turn around a lot of things. And why did they do it on a Friday evening?
Okay. Well, my point is, what exactly in that package you think might go awry? Because you keep saying if it is implemented the way it was announced.
So there are a lot of ifs and buts. The states have to hike the power. There's to double feeder systems. There's interest rates have to be passed on to DISCOM. So there, in anything is never a straight line. And hiking power again in this kind of a political environment might not be an easy task. That too for farmers, that too for consumers. So I am saying there is a resolve which one can see from them for them to, and this fortunately is not a legislative issue.
Yes.
So it doesn't require Rajya Sabha and Lok Sabha approval. So I am hopeful that even if they implement 75-80% of what is being told in the package, I think it will be a big thing.
Oh yes, I thought the best thing that I heard from the government is that they clearly told the PSU banks, they told the banks that you will not lend if the DISCOMs don't shape up. And I think that coming from the shareholder was very strong. That's where you can really arm twist everyone into behaving themselves. But more on that later. Raamdeo, what is your fear as an investor? Do you think that things will get derailed because the government may take this as a mandate to be more populist? Or do you think one need not fear that?
One is this big picture and political actions. I mean, a lot of these big headlines are there, the channels and newspapers, they are in the business of headlines. But there's a hardcore businesses going on,
Yes.
And the investing is about understanding those businesses, what's really happening. Say today HDFC Bank, I don't think Bihar outcome has any impact on their money making machine. I mean, if they're making 4,000 crores profit, they'll not make even 1 crore less. So understanding the reality of businesses while investing is important. Of course, I mean, you cannot overlook whatever is happening globally, locally. I mean, eventually they will have impact. They're important, but they're not knowable. So let's focus on to what's happening at business level. Clearly there is a little slowdown in the economy, whether it is a global or local, but there are still some winners. I mean, there are some huge trends underlying. First decades were defined by massive commodity inflation from $20-25 to $125-150. It was made out as if there is going to be no oil only in the world, So we talked about peak oil theory. Now we are, I mean, the same guys, they are talking about $20 oil as if oil is going to become like water. So, this decade will be defined by the collapse in the commodity prices. What took 15 years has taken 15 months to collapse. Now, the after effect of that, for any action, there is a reaction in the business level. So now we are going to see a lot of benefits, a lot of companies, they will benefit in their own way. Small way, big way. I mean, a lot of companies' future will be redefined. Negative also, positive also. So we have to see how our portfolios are aligned to these big trends. This is one. Second is, say, internet. Turn of the century, there was no internet. Today, everything is redefined by internet. And I don't know how much more it is. I mean, it is just, every day it is just marching. So a lot of new businesses are being built and a lot of businesses are destroyed. So we have to see that you are on the right side of the big trend. Third is GST. I mean, whether it's more political than economic right now, but whenever it happens, this will really make the country one place to make business. So if a company is operating with say 50 godowns or 40 godowns or 40 distribution systems, he doesn't need that. He might need 2 or 3 depending on his need. And then, so that will give benefit to the, so these are big trends which will happen, and you have to see who are good, who are and who are competent, who are not valued properly. And today, in given opportunity, where are those few 10, 15, 20 ideas? Some of them you will win, some of them you will lose. Eventually you will make money.
Well, hold on to that thought. We have to take a break at this juncture, but we are back with lots more questions to our veteran investors this Diwali Samvat 2072. Welcome back to this Diwali special Samvat 2072. My guests are Manish Chokhani, Raamdeo Agrawal and Madhusudan Kela. You've thrown many themes at us, and that directly takes us to, actually a sector-wise discussion as to how things will pan out. First of all, banks. I mean, you said HDFC Bank, they also showed actually a certain slowness in growth and margins.
Obviously.
But that apart, there is a reset in the banking space. You cannot take away from the fact that payment banks are coming with the cream of entrepreneurial talent in the country, with oodles of capital at least to start with, and with cutting edge technology. Will you still back the banks, or is that the sector that will not perform or will find it very difficult to perform in the coming Samvat 2072?
See, these are big. First time we are talking about literally opening about the banking sector in terms of licensing on tap also. So a lot of things will happen, and a lot of guys will fall by the wayside.
Yeah.
In the private sector banking, in a completely protected environment, 10 guys got licenses, hardly 2-3 survived. So now we are talking about even much more opened up opportunity. So one thing which clearly, because of technology and internet and the banking licensing, my sense is the coverage of banking, effective banking, which is almost half of the country, will go to 100%. That itself is like in telecom. So we have seen the benefit of telecom. Like that benefit of monetization of the formal economy is going to be massive. And that is
But
a positive
will the
aspect.
beneficiaries be the banks?
Yeah, so no, beneficiary will be bank if they do their job well. So which are the banks who can gear up to this particular new reality, new challenges, new competitive structure, and how these payment banks, small banks, small banks are, most of them, 99% of the banks, they are all talking about those, MFIs.
Yes.
MFI to be converted
That's
into
right,
banks.
that's right.
So XFI, AU Financier, everything else is all
It's a
MFIs.
MFI.
So they have a very different kind of a culture, different mindsets, and huge distribution, and they are actually bottom of the pyramid they are addressing to. So that's a segment which is not today with the big banks. So it is going to expand, and actually they will need support of this organized bank. So how these things will pan out in next 2-3 years, there will be different new winners and there will be some losers.
So you will,
Can I just supplement on banks?
Yeah, I was
If
going
I
to
could
toss
add
that to you.
That if you first look at the picture, let's say I'm just rounding off numbers, that we're a $2 trillion economy,
Yes.
and we save, say, 25%, so that's $500 billion. Of that, barely 50% goes to financial assets, as it were.
That's true.
The rest is still sitting in gold and real estate. So first of all, this economy from 2 trillion is hopefully going to 5 trillion. So you're expanding the size of the cake. B, the saving rate of 500 billion presumably will become 2 trillion by then. Within that, the share of money going to financial assets has to become better.
Has to become.
That's the whole intention of financial inclusion, that you stop buying gold or stop buying real estate and stuffing money under your pillow and so on. So the opportunity set itself becomes very, very large. 3 is, when you talk of payment banks, there are these large industrial groups, and I'm not sure what the economic model is of a payment bank as yet, other than PE will finance it and so on. But normally it's the small guy who worries about how will I face the big guy. Here the big guys, remember, are 25% private sector banks who are already on the digital path, much ahead of people. If they start shrinking their cost income ratios and they have this lead already, imagine the explosion which can happen in this space. So I think we are undercalling what can happen to the banking industry with the incumbents, who actually have a great tailwind now behind them, where in a way their shackles have been unleashed. That you could in theory now say, I don't need to open so many branches, put up so many ATMs, I can do it all digitally. So the opportunity set for private sector banks, NBFCs, is just extraordinary, I feel now.
Okay, so private sector banks, NBFCs, but still when I'm calling a taxi, I'm using Paytm.
Yes.
I'm not using the traditional challenges.
Paytm's hope in life is to become a bank, right?
Okay.
And the bank...
Exactly. So are you sure the incumbents are safe?
No, but you look at all the banks, ultimately they all have payment solutions. Today, HDFC Bank, as he was saying, or Axis, they're already offering you those payment solutions in their wallets. Now, it's like in the old days, do you want to deal with multiple vendors, or will I rather deal with one guy with whom I have more trust? And I have a history of 10 or 15 years. I won't switch if I get the service. If I don't get the service, then you have an error. And Paytm itself wants to become a bank.
Okay.
Right?
Even I would just like to add here, if looking at this big picture, it's very easy to paint a very gloomy scenario that there's going to be
The
so much competition. But it is
who's executed?
It is worldwide, people have thrived in competition. So competition cuts both ways. I'm saying the other way up, if you look at the public sector banks, which have had 75% market share in the banking industry, what constraints they are going through today, whether it is in the form of decision making, capital adequacy, their ability, if you let's say toss 50 people around who are youngsters, how many of these youngsters are actually going and opening accounts with public sector banks? So I'm saying where the market share will go and who will take the market share is what is going to decide, and it need not necessarily go out of
what is your answer to that?
Yeah,
see, in the last 25 years, we probably brought 5 banks, and the public sector share barely fell from probably 100% to 75, 70%. Now there are 25 new players in just 15 months or 20 months. So will the public sector share fall to 50%? Is that your guess?
It's a possibility. It's a very strong possibility. And some of the public sector banks also might surprise on performance. Like, you have a new chairman of a private face in Bank of Baroda. So it is not, you cannot say that all 30 public sector banks will lose market share or all of them will gain market share. Or all 20 private sector banks will lose market share, all of them will gain market share. So you will have to look at strategically who are the people who are actually positioned well to capture this opportunity. So you can't, it's very difficult
Manish seems to be saying that he'll put his eggs in the private sector bank's basket. What would your bet be?
My bet will also be the same. I would say that I will expand that to NBFC companies because they are extremely well positioned with this falling interest rate scenario and their nimble decision making process. And plus, there is no dearth of good investing credit. Let's not fool ourselves that India still requires a lot of credit. So it's just, and that has become more easily available because the public sector banks are taking that much more time to approve the credit. So what my point is, people who have capability to assess the risk and who have the capital, there is enough money to be made in the market today.
Okay. Well, let's get to more sectors, and especially to the boring sectors. Madhu, you spoke about DISCOM reforms. Surely that should affect a lot of the old economy stocks. How should an investor look at it? Aside from the fact that it will spur economic growth, for an investor, what is there in that theme?
So, Lata, if you observe the market for last 3-4 years, it's not very... it may sound very cliche that when you just do a sector, you do your bit, but that's not the situation. You look at the auto sector. It's been a very good performing sector for last couple of years, but there are so many winners and losers within that sector. So I'm saying in this entire old economy space, so much say, whether it is mining, whether it is power, whether it is DISCOM, whether it is T&D, there are bound to be some winners over the next 5 years, and it is the most hated sectors today. You talk to anyone, aisa muh ghuma leta hai. So I'm saying, and the money is being made in when you approach this differently. So there will be winner, but for me to say yes, because DISCOM reforms have happened, power sector is going to be the winner, that will be again stretching it too far.
Not power sector. Would you look at, say, power equipment sector?
Yeah, of course. I'm saying selectively. What I'm saying is still the art and science only lies in doing your bottom up work really well in a very exhaustive manner. Because the easy money era, in my opinion, that just because you're in a bull market, kuch bhi le lo, paisa ban jayega, I think that's all over. Now it's all hard work, it's really honest work, and within the sector really getting deeper into the companies, into business model, into balance sheets, and that is what will differentiate. So I think to answer the question straight, will there be opportunity because of DISCOM reforms? There is going to be plenty of opportunities, but is the sector as a whole a buying opportunity, whether it is T&D or whether it is, look at I don't want to get into individual name. In the transmission and distribution space, there were 10 companies, 2008, and the whole sector was booming. 10 out of the 7 have vanished. Look at their balance sheet, what has happened as compared to 2008. Now, if you hang on, just because the T&D sector is offering opportunity, and you say these 7 are looking cheap, you might actually get in a wrong foot, and the sector might boom, the wealth might get created, but you might just get with a wrong investment idea. So that's my precise point. It's going to be bottom up, but there are a lot of opportunities.
Okay, actually if I asked old economy stocks, especially mining, to Raamdeo, he will also turn his head that side. So I'm asking you, okay, go ahead.
So coming back to power, see, power is massive in the sense that without power, nothing works. And now we are talking about power for everybody by 2020. So the amount of power India can actually use is literally unlimited. Absolutely. Okay. Now, so you have a generator, you have the distributor, and then you have the consumer.
User.
Okay, so but industry is very sick because of very sad distribution system right now. So this DISCOM reforms is the heart of it, and not the financial re-engineering that okay you converted the existing 3-4 lakh crores to government debt and all. That's that you can do it always as a government. I don't think that solves the problem. Real problem is actually 25, 30, 40% T&D losses, which is theft, and so a lot of it is technical also. So how do you actually bring it down? And they have the target that 25% going down to 15%. I think real boom will start when you, I mean people like us, at least I will get much more convinced when you come down from 25% actually to 20%. Rest all you do, I mean that's a patch up.
No, it's happened in many states.
No, many states yes, but at the national level still it is, there's a lot of gap. Still in 3.5 lakh crore industry, you have an annual loss of 80-90,000 crores.
That's right.
And nobody knows the accounts. I mean actually accounts are also published after 15-18 months. So the issue is that there is a black hole in that entire industry. Till you fill that black hole, I think the prospect for that industry is not going to go up. Now the new minister is showing that possibility. You know, and
this
it's
is
a
what I
promise.
meant by execution. When I meant that, you know, they're saying that they will reduce it to zero, and this will not happen overnight.
And this is the mother of all the reforms, I'm telling you. In my mind,
And let me,
if this happens,
let me now
it
give
is
you
huge.
the disruptive element here.
Yeah.
Like you argued for banks, the reality is today in 2015, solar power is now cheaper than grid power.
I was coming to that.
Okay? So you are running the old model of there is a central mainframe computer and then there are wires drawn to every home and there's client server and the wires are defaulting. The issue is in 5 years, and again like Raamdeo said, 5x of our power lies ahead of us to be built. That is going to be solar sitting on your household.
Yeah.
When you sit on the household, there is no T&D.
Yeah.
The cost of a power plant is capex. That capex becomes now part of your mortgage loan, which is the lowest cost of finance. So you take a cheap power cost sitting in your house, get rid of all this T&D, boom, all the politicians are disrupted. What do you do now? How do you give free power and say it's a freebie to you?
No,
And I
that's
get uninterrupted power. So there are all these reform elements, technology, all this is coming together. I think 5 years later the picture is going to be so different. We won't be discussing like what were these guys thinking, why were they not changing it much faster?
So Coal India and the power companies are in to become kind of dinosaurs.
It's inevitable. There is rate of change in the world. And you cannot be running, like we always say, we have 18th century laws, 19th century organizations trying to run a 21st century country. It has to change.
No, actually, that's very true, but probably we are not talking 2072 Samvat. Many of your themes are probably 2075 Samvat.
But I'll tell you honestly, market discounts terminal value.
Okay.
So if I get earnings right for next year, and by then market is worried about, like you're arguing in case of banks, that competition, technology will disrupt. If you believe there's disruption and it's positive, your multiple goes up. If you think the disruption is negative, your multiple goes down. The whole gain and loss in markets is really made on multiples. You need earnings, of course, it's weight of profit eventually. But if I believe in the long-term picture, I will have patience to wait for that earnings to come through.
And I'll just add here, Lata, that's the precise problem with the investing community. Why are we focusing on the next 12 months? Who has told us that we have to make money only in 2072? You have to make in 73 also, 74 also, 75 also. We have seen, you know, we always end up underestimating what is possible in the long run. And we always end up overestimating what is possible in the short term. So we'll overestimate our ability to predict market precisely well over the next 6 months and 12 months, and we'll lose the big picture.
Absolutely.
I want to communicate to people who are watching this show that these are the times when you have to take. When you buy a house, do you call your real estate agent on every 3-month basis what is the value of my house? So why for equities review of every quarter? You review, but you have to invest with conviction to make money, and that cannot happen in 1 year.
No, that point is completely taken.
There's a great saying. It says things that you expect to happen take longer than you expect, but when they happen faster than you expect.
Okay, Manish, hold on to that thought. We have to take a break at this juncture, but we are back with more sector-specific questions to our guests this Diwali special show. Well, we have to get to some Diwali gifts for our viewers. They need not be 2072 ideas, but they have to be at least 2075 ideas, as you said. Raamdeo, let me start with you. The ace stock picker, where should people look for gains?
See, it is very dangerous to talk about, of course, I'm continuously 50-60% of the time I spend only on tracking companies and meeting the companies and all. But I would not hazard any kind of possibility of talking about a stock per se, because I think power of portfolios now are far higher than that of power of an individual stock. Okay, and there are very few viewers who are competent. See, what has happened is the market character has changed. In 80s and 90s and even till early 2005 or so, the competition of a retail investor was with a retail investor, broadly. Today, it's like a fight, I fighting a sumo wrestler.
Okay.
All the global sovereign funds and FIIs and domestic funds, insurance companies, they have battery of analysts, management access, computational capability. Against that poor investor, he's buying in IPOs at crazy prices. How does he win? So I think winning as an individual, they must realize, and I'm not saying that nobody can win. Yes, somebody can win. But for a large number of viewers, I think they must look at good portfolios, good portfolio managers.
Some of your favorite stocks used to be two-wheelers. Do you think that outsized gains from that sector is over now and it's time to go more to the four-wheelers?
I would think so, because one is that now the competitive landscape has changed somewhat. Honda has come, which is a private company, and it's a global giant. So it will definitely have its impact on, they have changed. If you remember, in 90s, it was a scooter country. They changed it to motorcycle companies.
That's true.
Okay. Now from motorcycle, they are again converting it to a scooter country. And in that scooter space, it's private. It's not for you and me. Activa is the sole running kind of I think by far the largest two-wheeler, and it is unlisted. So that kind of a competitive change is happening. At the same time, it is becoming very global. So you have Bajajes of the world, Heroes of the world, and I think we have one huge emergence, that is Eicher in Royal Enfield. So in premium, so there is another story which is happening within two-wheeler is the premiumization. All premiumization. So there we made massive money in Eicher, but now that has also run up its growth. So one has to be a little careful in buying those stocks. But four-wheeler, I think is a new game, brand new game, in the sense that it is the largest market in the world, and we have almost all the guys vying for that pie, and there are some opportunities there. So you have to be, whether in ancillary or the main OEMs, I think you can make some decent amount of money. But automotive remains a very good segment to invest per se.
Okay. Well, one segment which actually gave money and was the usual safe harbor was pharma. But in the last few weeks and even months, we've had a series of accidents from that space. Is this the time primarily to buy the distress? Manish?
So again, like we're all saying, is you don't buy a sector, you buy a stock. And again, in the sector, whether it was private banks last year, 3 or 4 did very well, 1 or 2 didn't. Similarly in pharma, it's playing out now that you've got the leader which has disappointed and so on. So it is about individual stocks. But I just want to pick on from what Raamdeo ji rightly said. Look, we are a 26-year-old country. Equities is the place to be, and the best equity is to be the one which you build. All of us are sitting here because of businesses we built, more than even the stocks we bought. So if you're 25, 26, first think about being a person who creates jobs, not someone who's looking for a job. That's really wealth creation, number one. Number two, if you don't have time to do this full time, like Raamdeo was rightly saying, just invest in the right fund manager. And there are enough of them. I mean, they have wonderful mutual funds running in their own houses.
We have 3 of them in front of us.
And they should be the ones where, people should be putting in, because where else will you get the best person in the country managing your money for 1 and 2%? Why are you applying so much brains? Because you're not going to beat these people anyway. Number 3 is, if you are looking out for rate of change, like he again said, all these computational powers and brokerage houses and all these are focused on the top 100, 150 companies. So your edge, if any, is not going to be in the Nifty. There's no point obsessing about where the Nifty is going.
That's right.
Find the next 50 out of the 150 to 200 range. That is where probably a retail investor who can look around the old Peter Lynch model of see what is going on, do some financial homework, and then go and see if you can invest and make money in that stock. Lastly, I would just say, like he rightly said, thematically, why are you investing in India is for big demographic change. There is big digital change, and there is this big export opportunity for companies which are competitive. These are by and large the 3 big baskets that one has to think of. Even if you look at last year, and I'm taking that as a proxy for the world, what played out, your pharma, IT are really your play on globalization. your media and auto are really consumer discretionary and who are benefiting tremendously from what's going on in India. Financials is your overarching, I can get power to housing finance, to consumer finance, all in one place. And then these few consumer picks which one can pick. So for the average investor, this is good enough. You don't need to overcomplicate life to think about, will I get the mining cycle right, will I get the power reform right? Doesn't matter. There's such a wide array of stocks in just these 3 or 4 sectors. Why do you need to look outside?
Yeah.
Fair point.
Lata, just to add to the point, the one point which you asked missed was, when I go to a retail investor, what is the questions you're asking? कब लेना है और क्या लेना है?
And do you have enough in the market?
कब लेना है और क्या लेना है? Those are 2 completely wrong questions. The question has to be कितना लेना है और कितने समय के लिए लेना है?
Okay.
That is the moot point.
Yeah.
That a lot of people have participated in equity story, but portfolio is 2%, 3%,
Right.
5%, and in that portfolio you are looking for multi-bagger. You are looking to create charisma. You don't bother. Your 95% of your real estate portfolio is real estate or gold, which is lying down idle. You don't bother to even inquire the rate of that for 3 years, but you give money to Motilal Oswal Mutual Fund and Reliance Mutual Fund. You want every quarter this fund has underperformed by 2%, so I need to look for a better manager. I need to fine tune my entry in the market. So I think if the retail person can answer this question, कितना लेना है और कितने समय के लिए लेना है, I think lot of this debate will close down, trust me. Yeah, as Manish said, we have 20 years of experience and stock market is like a swimming pool, कितना ही आपको कितना सिखा दे आदमी ना कि ऐसे जाना, ऐसे डुबकी मारना, ऐसे हाथ पैर ऊपर करना, द फैक्ट इज जब तक 2-4 बार पानी अंदर नहीं जाएगा तब तक स्विमिंग नहीं आता है. एंड वी आर सेइंग दैट हमारे 2-4 नहीं 10-20 बार पानी अंदर जा चुका है. सो व्हाई नॉट टेक एडवांटेज ऑफ दैट, गिव मनी टू 1%, एंड दिस इज फॉर अ नॉर्मल रिटेल इन्वेस्टर. देयर आर सम savvy traders, some savvy high net worth individual who have the capability, let them do it on their own. And saying we are talking of 120 crore people, out of them at least 10-20 crore people are investing population that are potential investor, and I can assure you 98% of them neither have time nor the skill
Absolutely.
to do it. And for them, this advice that you choose the right portfolio manager, you have right allocation in equity, and you have a right time frame for gain. No one can beat you.
Absolutely.
And the cost of bragging, let me just tell you, in whatever disclaimer you have to put, you put. Reliance Growth Fund is up 80 times, not 80%, 80 times in 20 years. We are celebrating coincidentally 20 years of wealth creation. Where can you get? This is after fees, and this is after taxes. You didn't have to pay a single penny tax. You don't have to pay any fee. This is after fee and tax. There is, and with this kind of track record, you still want to go and find out for your own self that what will work in discounts. I'm sorry.
No, I take your point. I take your point about the inability of a retail investor to keep track of
And that's the message of Diwali,
But the point is, that is your uniform message for Diwali, that trust the guy who is specializing in looking at stocks, all for a fee of 1 or 2%. But Madhu, not for nothing is the Sensex called a sensitivity index. It certainly propels or distances the retail investor. So for the sake of that investor, do you think there is a likely shock on the Sensex? Is it that we are going to see 22,000 for whatever reason, for global reasons?
Honest answer, I don't think there is any shock.
Okay.
There will be disruption. I don't know whether you call 10% correction as a shock. I don't call it a shock.
Possible.
That is possible. That is entirely possible. In any market, that is possible.
A Samvat conversation does not end unless you tell people that this is the kind of the worst that they can expect and this is the kind of highs that you can expect. So Raamdeo, on those lines, is 9,100 going to be the high for some time now?
I don't think so. I think we'll be surprised by, because expectations are very low now.
Yes.
Last year expectations are running high. So we are starting with a very good, very politically, economically, globally, every aspect of it slightly, kind of
Shaky.
Yeah, shaky, and things are not good. I think when you give up, then only markets rise. In 2002-03, I thought that world is coming to an end after 9/11 and all, and we saw the biggest bull run. Okay, the world is saying oil is down and out, And nobody knew 1 year back that 100 is going to come down to 50. Okay, now they are, so my sense is a lot of surprises are in store, positive as well as negative. Okay, so we could be anywhere, but as I said, now today expectation is low. So I think we'll have a very decent time on a 12 months basis. And if you have an investing horizon of 3 to 5 years, I think there'll be a year when markets will rise by 50, 60, 70%. So take your position, because we don't know whether it is going to be starting from tomorrow or after starting after a year. We have seen the corporate profits, they remain stagnant for 4-5 years. Now corporate profits are about 3% to GDP, which can go to as high as 7-8%. Okay, so it's still falling to GDP. But when it reverses, it will just go blast in next 3-4 years. So, and the reversal, we keep hoping that will happen next quarter, second half of the year. It has not happened so far. But on a 3 to 5 year basis, I remain optimistic.
No, two very good takeaways from you, that 9,100 need not be the roof even in the next 12 months, and that in the next 3 to 5 years, there can be 1 year of 50-60%. What about the downside? Is it that you can see, 7,000 in this combination of negative trends that are coming, or don't we go that far?
See, if you look at the history of index, okay, there are 4-5 big years of decline.
Yes.
That is 92, 93, 2001, 2007-8.
Yes.
But they are always preceded by 5 to 6 times expansion.
Okay.
So the hangover is after the party. But party is yet to happen this time.
Okay.
So first party will be there of expansion of 4-5 times.
A bit of a party happened May 16th, 2004.
But that's again gone. Okay. So what
9% up, Lata. Index is up only 9% since the time Modi ji came in the power. It's only 9% up.
No, and oil is half.
Yeah, so see, don't talk about 10% correction or anything like that as a big event.
Okay.
That is any day, from any level, always it's a rolling 10%. It can happen. But I'll be very surprised on 12 months basis, we have more than 5-6% correction on a year basis. It will come back. It can correct by 10%, but it will come back to be at the same level or something like that. So downside is very limited. And give a 3-4 years time, upside is massive.
This is a great Diwali gift coming from you. Manish, you don't have to concur. But do you think that 9,100 remains a roof?
I think Madhu said it very well, and Raamdeo, as always, has expressed it beautifully. That if you express the problem as you might lose 10% and you will almost certainly make at least 50% in 3 years, is that a good bet or not?
No, that's
so instead of obsessing about, oh, the market can go down, of course it can and it will. For sure it will go down 10% repeatedly 4-5 times. If you look at history of all these great companies, from Microsoft to Infosys to everything, they all had precipitous declines of 20% across their career. The question is, are you invested enough and are you holding it for long term enough so that you don't get scared out of the market when it does go to 7,000, if it does. So if you're holding on till 13, 14, 15,000, what's the problem?
I have bought that wisdom.
So just stay with that, because that's the question.
That's the wisdom.
What he said right is the way we frame the question influences the viewer. I think the question is not about being fearful about this year or hopeful about this year. Am I hopeful about equity investing in India generally or not? And am I picking the right sectors, the right managers, the right companies or not? If I've done that, time is on my side, I will surely make money here. Because there is a rate of return in these businesses which you do not have in your gold bar, which you do not have in your real estate. And in fixed income, your fixed deposit rate is going to go down. That is certain. So your option is only equity. You have no choice.
So one new thing which I learned, Lata, in last 2-3 years myself, when I've been really digging deep, that when you talk about this, what you're worried about is not the risk. You're worried about volatility. So let us differentiate what is the difference between risk and volatility. So markets be volatile? They can be volatile and they will be volatile. That's the nature of market for 100 years. But are they risky? If you have time by your side and if you have the right portfolio manager by your side, are they risky? No. While fixed deposit is actually risky, much to the misconception of people, yes, because you're losing out the opportunity cost.
Okay.
Who has paid?
You're losing capital.
No, but ultimately, whether you're losing money or whether you're losing profits, it's a loss. Yeah. If let's say fixed deposit has gone up 10 times in last 20 years and mutual fund has gone up 80 times, that 70 times someone has paid. Yes. It is just that because you don't lose money, you are unconscious about that loss. You are unconscious about the loss of profit. So let me just, sum it up, because Diwali is a fantastic time. It actually pains someone like me, who's been in the mutual fund business for now 15 years, that retail investors are still not participating in the India story to the extent they should be participating, because you are stuck in the wrong question. You are stuck, कब लेना है, क्या लेना है. Please change it. कितना लेना है और कितने time के लिए लेना है. And I think you will get it right. And actually speaking, if you explained well, which is what you are giving us the time today, so I think they will ask this question. It is not that savings are meant for 1 year. Savings are actually meant for 5-10 years.
Yes.
So if they start putting some amount of this saving for 5-10 years, I think after 5 years they need not be taught any of this. They will see the proof of the pudding is in the eating.
I've got 3 beautiful pieces of advice from all 3 of you, but for my personal pleasure, I want one more question answered from all of you. Purely personal pleasure. I'm not asking anyone to go into fixed income. How much will rates fall in the next 12 months, you think, Madhu?
Next 12 months, there is a strong possibility of at least more than 50 basis point.
Manish?
Yeah, I would hope more than that.
Yeah.
Please give me your number.
I'm not an expert, but 50 to 100 basis points I don't rule out.
Okay.
Minimum 100
Raamdeo.
bips.
Okay, minimum 100 basis points. That itself is a great fuel for the economy, you will have to say. But from my 3 veterans this Diwali, I think we've got 3 beautiful Diwali gifts. First, Raamdeo telling us that probably there is a little bit of a downside in the markets, but he doesn't even expect 7,000. He thinks 9,100 will not be a roof, and over the next 3 to 5 years, 1 year of 50-60% is definitely possible. That's coming from a veteran investor. From Manish, the advice he gives is, what is the downside for this market for an India which is 26 years old on an average? A maximum 10%, but the upside is at least 5-6 times, as he put it. So that's the advice, the Diwali advice from Manish. And from Madhu, the most seminal gift that he has given us is, ask the right questions. क्या लेना है, कब लेना है would be the wrong questions. कितना लेना है और कितना समय तक रखना है, those are the correct questions. So great gifts from our veterans this Diwali Samvats 2072. That's it on the special edition, but I'm sure the benefits of these are going to last for many Samvats. All of you have a great new year ahead.